Bitsby Trippin has a video coming out today, I believe, that will be covering this more in depth. I just wanted to make you guys aware that he did do a tweet. And this tweet is kind of in response to the article we talked about at the end of the show yesterday with Red Panda Mining covered on his channel, specifically discussing, of course, the pricing of cryptocurrency and its relevance, I suppose, as far as all others for mining, and if ETH is, if post-merge and mining with GPUs is viable. What Bitsby Trippin came out with here is he said, based on what the existing output of ETH daily mining payouts is versus GPU networks, this is purely on a crypto price versus its network yield, block time, and block reward comparison, and many more factors will play. Of course, he's correct, but the current price is what he has listed. If replacing Ethereum 100%, what the price of that currency needs to hit, the increased percentage, block reward, daily blocks, daily review, and full unit per day. This is a great chart. So huge shout out to Bitsby Trippin. Follow the link in the description below to follow him on Twitter. Make sure you go then to his Twitter profile, find his YouTube. He should have a video covering this in more depth today. What we have learned, obviously, is that you would have to have some pretty crazy price discovery. The lowest price discovery would be on Ethereum Classic, which only needs an increase of 5,059%, which, sounds like a ton, but it's a lot better than some of the others. So for Ethereum Classic, at least by his math, that would be the number one or the easiest one or the least amount of increase needed, and that would have to go to $1,100. Not dissimilar, of course, from Ethereum as far as pricing goes, just a little less due to its block reward being a little bit higher. Of course, that doesn't include fees and other things that could play a part if the network started being utilized at that level. For Ravencoin, you would have a 20,000% increase, a 20,151% increase, and that would end up needing to be around $5.63 per Ravencoin, and that's due to its high, of course, block reward at 2,500. Then you have Flux, which would need to go up to $775, and that increase would need to be 119,000%. That's according to Bits. Ergo would have to go to 427, which would actually be second place at a 17,000% increase. So I guess really you would put, you would really want to put Ergo, I think, second on this list, Ravencoin third, Flux, or then you would put Conflux at fourth, because it would need to go to $58 and 74,000%. Now, what this doesn't include is a distribution of miners, right? So this would be if miners needed to essentially only move to one coin. So all of the miners from Ethereum moving to Ethereum Classic. What it doesn't include is all of the miners evenly splitting across all of these networks, right? So if all of the miners split between multiple networks, like let's say Flux, Ergo, and Ethereum Classic and Ravencoin, or just all of them, right? Then the requirement for their increase in percentage would go down, essentially. But I wanted to bring this to y'all's attention. Make sure that you guys go subscribe to Mr. Bitsby Trippin. He is the OG in the crypto mining space, especially on YouTube. So definitely go take that into account. Inflation unexpectedly re-accelerated to 8.6% in May, hitting a fresh 4-decade high. Oof. Bitcoin dipped about $500 on the news, trading around $29,500 US. It's down to $29,354 as we speak. In the minutes following the report, the Consumer Price Index, the most widely tracked benchmark for inflation, rose 8.6% on year-over-year basis in May, topping expectations that it would decline to 8.2% from April's 8.3%. The core CPI, which strips out food and energy costs, rose 6% year over year in May, dipping from April's 6.2%, but more than expectations for 5.9%. On a monthly basis, the CPI rose 1% in May, ahead of expectations for gain of 0.7% and more than tripling from April's 0.3% advance. The core rate rose 0.6% in May, flat from April, but higher than expectations for 0.5%. The unexpected fresh 4-decade high of 8.6% in the headline inflation is problematic for monetary policymakers who are in the middle of a rate hike cycle, but may have been eyeing a pause at some point later this year. Now, the question may be whether the Fed needs to raise rates by 75 basis points per meeting rather than the planned 50 basis points. Bitcoin, which along with nearly all assets has taken a major hit as Western central banks have begun tightening monetary policy over the past few months, has dipped from 29,500 to 29,500 from 30,000 in minutes after the report. It remains off by about 65% from its all-time high and hit the fourth quarter of that it hit in the fourth quarter of 2021. The interesting point here, that though obviously, is like this isn't a big hit to Bitcoin. The markets seem to be getting hit harder, obviously. So it's a little interesting. I would expect it to go up at some point. We've had this conversation, but for now it is following a little bit more like traditional markets. Quote, there are certainly positive signs that would indicate the worst on inflation is behind us, end quote, said Jonathan Silver, founder and CEO of Affinity Solutions, a global insights firm tracking consumer purchasing habits. The job market remains strong, which is putting money in people's pockets. However, price increases are still outpacing people's paychecks. Hopefully, this trend will reverse itself as inflation reaches its peak and begins to dissipate. Our purchase spending data suggests that this is the direction we are headed, he said. This morning's inflation report is the last major economic indicator that the Federal Reserve sees before its next meeting on June 14th to 15th, at which the central bank is widely expected to raise its benchmark federal funds rate by another 50 basis points in what would be the third rate hike this year. Federal Reserve Bank of Atlanta President Raphael Bostic in late May hinted at the possibility of pausing rate hikes in September if inflation moves in the right direction, which obviously clearly it's not. That was seemingly shot down by Fed Vice Chair Lyle Brainerd days later, who said it's very hard to see the case for any pause in tightening cycle. Quote, if we do begin to see reduction in the CPI numbers as expected, I do think we will see that reflect well within all markets, signaling that the tide is beginning to flow in the correct direction. And we should see some more risk on investment come back to the markets, with both Bitcoin and total markets seeing some increased volumes and price action, end quote. Howard Greenberg, cryptocurrency educator at Prosper Trading Academy, said a negative number would cause a much bigger downside event than the expected, or even a slightly better than expected number as has to the upside. Essentially, at the end of the day, like obviously we talk about cryptocurrency, specifically Bitcoin, as a hedge against inflation. And it's really hard for me to really parse out the data because this is not something that I'm not a financial expert or anything like that. So what I do see, though, is Bitcoin holding a lot stronger than a lot of other assets and really has not dumped down to what I would have expected for a typical super cycle. And that compounded with the fact that we are seeing record high inflation and obviously all these issues within the economy and the world in general, Bitcoin doesn't look as bad as I would expect it to look right now. So I don't know. Like, that could be good news for the next super cycle. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.